Hi everyone, happy January 4th. We are progressing through the first week of the year. So far the markets have been slightly down to start the year. Depending on which sectors you look at, we did find some interesting sectors to start the year, but let's do a sector review for January 4th. And before we get started, just wanted to let you know that these videos are for information purposes only. Please do your own due diligence before making any investments based on your risk tolerance and also your understanding of the subject matter here. All right, so proceeding further, let's start with QQQ. We saw that QQQ broke the 5-week moving average earlier this week. Now, tomorrow is Friday, so it is options expiration. So there could be some volatility expected tomorrow. And if we do end up retaking the 40150, which is possible, we could get a wick here and end up taking the holding the 40150, which is the 5-week moving average on the QQQ. That would be kind of more constructive to the upside for the QQQ. But so far, if we do close below tomorrow and this week, then there is a higher likelihood that we proceed further into the 380 zone, which would be the next support level. 380, 385 zone. You can see there's some fight between the demand and or the demand and supply, or the buyers and sellers here. So they could revert to this area to kind of resort out, is the supply going to win or the buyers are going to win again. So 380, 388-ish to the 380 zone would be the next battle zone if we do close this week under that 4150. For QQQ, if we take a look at S&P is still holding on, barely holding on, but still holding on to the 5-week moving average. We are in this kind of upward channel here in S&P, but a loss of the 5-week could accelerate, which means the loss of SPX 4700 or S&P around 468. Any closure for the week below that would mean that we are getting more of a reversion here, and that could accelerate with the puts coming into play below 4700. Now, if we take at the other sectors, we can take a look at XLK. XLK was interesting today. We have a sell-off down to the 185. And why do I say it's interesting? If we take a look at XLK on the volume at price, so we did take out a VPOC today, and we are closing under the monthly value, which means that if we do end up, there's going to be another kind of fight between the buyers and sellers here. But if we do end up closing below this, below the VPOC levels specifically at the 184.38, that means that the sellers have won the battle, and we could have a further acceleration here in the sell-off in XLK. And if we take a look at the weekly chart, we can see that the sell-off just started, and we could kind of consolidate around that VPOC takeout on the daily and then move lower. In order for that to get nullified and for it to be a bullish setup again, we would need to take back the yearly high at the 189.45, 189.34. A take back of that on the weekly, either this week or even next week, if we get a close above, then that would revert back to a bullish setup for XLK. Okay, now let's take a look at XLP. All right, consumer staples we discussed have been in a sideways pattern. We have a alert set at around the 75 mark, and we are still kind of holding and seeing how this develops. So far, nothing new on the consumer staples front. SMH, semiconductors, another interesting chart here. We did have a breakout of this kind of sideways consolidation that I had put together for 2023. We obviously broke out at the end of the year. Now we're reverting back to the top of the trend line here. Again, like QQQ, it remains to be seen how the week closes. But if we do get a closure below the 5-week, which is the 169.22, then that would mean that we could have a further acceleration down to the top of the trend line here at the 160, and that also happens to be an area where previously buyers and sellers have kind of fought. So that would be an area of interest where price might consolidate further. IWM, small caps. So for small caps, we can see that we are breaking down from the 5-week, but we're pretty close. 195, around 195 is the 5-week. 195.83 to be precise, and we are at 194.50. So we could retake that much easier than QQQ and XLK and some of the others that we've discussed, SMH. We are much closer to the 5-week here in holding that into the end of the week tomorrow. But it seems so far that we are in this kind of upward channel, and we hit the top of the channel and we are selling off below. So we could, if we especially close below the 5-week, could see a further sell off into the bottom channel here, which is somewhere on the 177 mark for small caps. Let's take a look at the mid caps. For the mid caps, similar to IWM, a similar type of upward channel, and we are watching for the 5-week closure above or below the 5-week to make a decision over here. XBI is the biotech. Biotech is interestingly holding in here above the 5-week and consolidating. So this looks definitely more constructive to me. XBI, so it could be just waiting for the 5-week to catch up and consolidate until then. And then would be the what is interesting. So next week or the week after is triple witching week. So January 3rd week for options. So could be an interesting week where we see some volatility, and going to be watching for a breakout on XBI. So definitely something to keep on the radar here. I'm going to highlight XBI as a kind of biotech as a place to look for setups. IYT transports. IYT, again, in this kind of rising channel, like we saw previously for IWM and mid caps, but it has sold off much further than the rest of them, and it is looking like a closure is imminent below the 5-week, which could mean that we further accelerate down to the bottom channel, or at least some of these other supports down here to the 240 mark. So IYT looking less constructive here. XLI industrials. Industrials are looking healthier. They are holding the top of the 5-week here, and so that would be a more constructive look on the industrials here. So we'll look for the weekly closure and then kind of study this on the weekend on XLI to see if there are any setups emerging from the strength here. XLU. XLU is something of interest to me. The one thing I don't like about XLU is that the moving averages are kind of mixed up here. You can see that, excuse me, the 200-day is at the bottom. Excuse me there. 200 days at the bottom, and then the 50 or the 20 is here. This might be the 50. Yeah, the 50 is at the top and the 5 is at the bottom. So what I would like to see is 200-day and then the 50-day, 20-day, 10-day, 5-day, you know, in order like that. That would mean that an upward trend is established. But having them jumbled up like this just means that the trend is starting to develop, but is not developed yet. So when you go into these types of trades, you got to go in with a little bit more caution, because these could reverse at any time. And the other thing is that there's a lot of overhead resistance with all these moving averages up, kind of colliding against the demand that is coming up over here in XLU. So still an interesting setup, but I think the XLV setup that we saw earlier is a little bit stronger, because you can see the moving averages are kind of nicely jumbled up here. There's consolidation to give buyers and sellers time to kind of make up their mind on which way to go, and the 5 week is closely following the breakout here in XLV. So looking a lot more constructive. The only thing I did notice in XLV is we do have a clean breakout on the yearly, but if we look at the daily, we can see that there was a VPOC takeout where previous buyers and sellers have fought, but it seems like we have kind of held that breakout and are hopefully close above the VPOC level. That could mean that we are heading higher in XLV, and we might just be waiting for this 5-day moving average to catch up here and consolidate until that. So definitely keep a close eye on XLV. XLU is the other one, and XBI as the developing sectors for 2024 so far. Let's finish this off by XME, the metals and mining. Again, not a bad look, but we are waiting. We have an alert set at 60.85, or what is that? 60.85, to see if we can get a closure above that. But so far we have held. The moving averages all look kind of well aligned here. So XME, also not a bad look. I'm going to highlight that. It is kind of waiting for a kind of a breakout here. You could kind of start looking at cheat entries based on the weekly closure tomorrow. If we do hold a 5 week, you could look at a small cheat entry. And this is something I'll go through in my system in the later months. As I release more and more of my system on my website, akshaygill.com, I'll talk about cheat entries and then breakout entries and so forth. But you could look at a cheat entry here and then wait for that breakout on XME, and similarly on XBI. Those are two kind of areas where, like, if you look at XBI, again, the moving averages are all coiled up, and kind of, which shows that we have been consolidating. The only thing on the XBI is the 200 is above here. This is 200 week. If you look at daily, you can look at the daily. It looks a lot better on the daily time frame. The overhead resistance is minimized over here, but we do have the 200 week just above in XBI, but that is still about 10 points away. So it depends on your entry. You could have wait for that. If there is a breakout here into the 200 week and 200 week consolidates a bit, if you have a little bit of margin here on the between the 200 week and where your entry is, you could still hold that position into that overhead resistance, wait for it to consolidate and break out further. Or if it gives back those gains, then you have a stop here at your break-even price. So, but looking at XME, back to XME, you can see even the weekly moving average is below here. So the overhead resistance is minimized on the weekly and the daily time frame. So in that sense, in the overhead setup sense, this does look like a better setup than XBI. XLF, the financial sector. XLF is, it looks more ready for a breakout, a very tight consolidation here, volume going down and consolidating here. It does look like an area to watch, and our alert is pretty close. XLF, it might have even triggered today, but didn't get a closure above that. But that is something to keep an eye on. Let's take a look at XLF here. We can see that we are contending with the top of the monthly. And if we look at the weekly, we are quite above. Actually, here's one of the issues here in XLF. We have a VPOC here at 38. So a VPOC takeout at the 38. I'm going to move this up to 38. VPOC takeout at the 38 and a closure above 38 would then make me more comfortable in a further run on XLF, but that needs to be taken out first. That's the overhead supply needs to be taken out first. Just a few more here, ITB and XLY. So home builders, we did try to close under that gap zone, but again today we have we kind of opened below, we kind of opened into the gap, and then we have bought into the gap here, and now it could easily show this overhead resistance with we're on the daily chart, so this is the 20-day moving average, could sell this off and further get us into this gap. I'm going to move this alert right here on the ITB to see if we do start to sell off. This could be an area that could further sell off ITB, one of the stronger sectors of 2023. It is a little stretched here, in my opinion. And we are looking like we might get a closure below the 5 week, but again, tomorrow is Friday, and we could easily buy this back. So we would wait till the end of the week to see on the weekly chart how ITB ends up closing. And finally, we have XLY, consumer discretionary. That is looking a lot weaker compared to everything else we've seen. We are entering this kind of tighter zone, but I don't see support until this red box here, which is around the 169. Let's just check the volume at price as well. Yeah, 167, 169 looks like to be the next support. Let's just take a look over here. We do have some support here on the monthly, but if that breaks, I'm going to put an alert right here. If we do end up breaking that, then we have a possibility of a sell-off, a 10-point sell-off to the 167, which would also be the top of yearly for on the weekly chart for this. And that also agrees with our assessment here with the tight demand supply zone, the tight trading that has happened before in that zone. So let's wait for that weekly closure and also to see if we get a daily close below that monthly value area. And if we do, this could be something to play short for a 10-point gain if you are looking to do that. All right, hope that was helpful. And again, please do your own due diligence before investing. It is a risky game, especially shorting stocks. So please do your research and start with paper accounts if you have to, in order to get comfortable with trading.